Hi, it's Greg, and I'm here with your Daily 5. So, my first stock to watch is Medtronic. I really like the way the table is being set on this one to break out to new all time highs. Goes back to January 2020 with a price right around 118, and we've just hovered in around that level here for all 3 months of the 2021 calendar year. I want to see this break out to the upside here, and as it breaks out, I think I want to be a buyer. Again, I want to be involved in defensive areas in the market, healthcare, utilities, consumer staples. I think those are three areas that are starting to take over the leadership for the first time in months. And so I would expect that good names like Medtronic might be able to follow along. So what we've got here is a PPO just gently pulling back for the first 3 months here. I want to start to see this turn back up and make another run towards higher highs. The scooter ranking is kind of right around 30. I want to see that bounce off of here and get going. The chart sets up nicely. I like it. It looks pretty impressive just with the way this 3 month is pausing, and it's all set up if we do get this rotation continuing in healthcare. My second chart is Proctor Gamble, and Proctor Gamble owns Oral-B, and Oral-B makes $200 and $300 toothbrushes now, and you can get electric drill for $49 that spins, but somehow in a toothbrush it's $300. Anyway, with that kind of number, they should be able to make some money selling toothbrushes. I like this PPO turning up right below zero and starting to head higher. I like the price moving above the 10-week and 40-week moving average, the full stochastic moving above 50. These are all nice signals here that tells me things are getting going. The relative strength on the compared to the S&P 500 is breaking the downtrend and starting to push higher. And the scooter ranking has dropped below 30 or 25 for the entire 3 months. And one of the things I like is when it underperforms and then all of a sudden it starts to really outperform. So Procter & Gamble to me looks well set up here to take the next leg higher. It's a defensive area of the market, and if the market's going to roll into that, I think these $300 toothbrushes could do the job. Amcor is a materials play, and materials broke out to a new high on Friday, so that's interesting, but I like the way the table is set on this one. We've been trying to break through these highs for almost 6 months, and it seems to me like we're getting pretty close to ready to do that. We dipped below the 40-week moving average 2 weeks ago. Anybody who wanted to sell had the opportunity to get rid of their stock on that moment, and now it looks to me like it's setting up on a leg higher. We don't have the same clues we had on Procter & Gamble where things have already started to improve a little bit more, but I do like the fact that the PPO is turning up above zero. That's a nice clue. I like the fact that the full stochastic is starting to head higher here, trying to get up in that 80 area on a weekly chart. That looks pretty bullish to me. I do want the stock to start outperforming the S&P 500 here, so this needs to kick up. And then this area where it's stuck below this 25 or 30, I want to see this start to accelerate to the upside. And as it does that, that looks to me another area of interest. That all of this, if the stock starts to break out, I think all of these follow-through signals will kick in, and we could get a nice upside run in this name. My fourth stock is Dollartree. And Dollartree is breaking out to new 52-week highs this week, almost new 2-year highs, but new 52-week highs right now. It had an uptrend going on here for the last year, briefly dipped below the line, tested below the 40-week moving average, got rid of anybody who didn't want to hold it, and it's been climbing ever since, but now it's moving on to a breakout. So again, with all of these $1,400 checks floating around, I think that's one of the reasons Dollartree could also improve. And if we're going to a more defensive part of the market, Dollartree is one of those cash flow stable types of businesses, and I'd like to see that work out well. So starting with the scooter ranking, we've moved above 50 here. This looks like it's ready to climb up. I do want it to get out of this middle area and become a top performer. That would actually help quite a bit. It's mostly on the back of this move to safety that I like Dollartree here. If we were in a regular growth mode, I wouldn't pick it as the stock that I want to own. So I want to see the relative strength start to pop out here, break out to the upside. I think that would be helpful. Otherwise, if it just keeps tracking the S&P 500, it's going to be hard for attracting new money moving into the stock. Looking at the full stochastic, it's popping above the 80 level. That's just bullish. It can stay up here for multiple months, 4 or 5 months. So I'm not thinking of this as a trade for next week. Again, we just started to break out this week, so this looks like a pretty good setup to go higher. And my PPO downtrend line from the beginning of the year is starting to crack, and we did get a PPO buy signal on a weekly chart, and it's only this data as of Monday night. So what we're looking for here is for this to continue and end up giving us our PPO cross signal to get started. But I do like the breakout to new highs here, so that looks pretty good for me. And lastly, my favorite stock here is Church & Dwight. And the reason I like it, there's a lot of things going on with this particular stock, but I do like the fact that the PPO is starting to turn up right around zero and looks like it's ready to start its next leg higher. Again, it's in the defensive area of the market called consumer staples, and it's non-durable home products, obviously. So here we see this downtrending trend on the stock basically from last August, September, a 6-month downtrend, and that looks like it's starting to break out, and I want to catch this next leg higher. The full stochastic is moving above 50, so that looks pretty bullish to me. And we've also got this relative strength downtrend going here that is now being broken. So everything looks like it's already starting to click here on this particular stock. We're moving above the 40-week moving average, as you can see on the Zoom panel, a little bit easier. And again, the scooter ranking's down in the bottom area, but I like to play it as it comes down from this bottom area and starts to resurge back. As it starts to move back higher, that's kind of a place where I'd like to be interested in the stock. The big thing to think about here is as you rotate into defensives, we should start to see those defensive stocks turning up. And when I ran my scan, some of my scans for setting up the daily 5 here, one of the things that's interesting is all of a sudden I'm starting to see signals show up in these sectors, in the consumer staples and in the utilities and in healthcare. So it aligns nicely with what I was starting to see in the market rotation from my newsletters. So I think there might be an opportunity there. Speaking of newsletters, if you're interested in anything at gregschnell.com, you can also go over there and snoop around. Lots of things to look at. So I would head over to gregschnell.com/explore. It'll tell you a lot about what you'd get as a subscriber. I currently have a sale going on right now that would knock it down by $363 to $497. And one of the things that a lot of people like about the membership is their ability to get the Schnell Strength Index, which is currently at 52%, and it basically is trending lower. Every rally has less and less participation by the overall market, the different groups. And we're starting to see this rotation into defensives. So perhaps that all makes more sense. Anyway, that's the kind of backdrop information that you can get with a subscription over at gregschnell.com, and hopefully you'd find that interesting and there's a little bit of value there. So once again, thanks for taking the time to watch. If you have any questions, you can always shoot me an email at info@gregschnell.com, and hopefully that'll help you out there. Thanks, everybody. Have a good week. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.